Good morning. This
Nice one.
is February 3rd, 2014. It's the hangover day after the Super Bowl. We just turned on the cameras and everything, and we got Harry from Live Squawk here. We're going to talk a little bit about the news.
Hey, good morning. How are you?
I'm great. How are you? I did not watch the Super Bowl, but I have a sneaking suspicion you did.
Only parts of it. Yeah, till about midnight. But it was good. I quite like American football.
Yeah,
Yeah, I'm not. It's on par with rugby for me, so I quite like it.
that's good. Uh, I don't know. I'm trying to stay away from all organized sports now. It's like a purposeful thing, and I'm pissing so many people off by saying that. So.
Oh, really?
But has there been any developments this morning that's interesting to talk about?
Well, the PMI readings have come in for the Eurozone and Euroland generally, and it's showing the continued pickup, I think, of the economy. Again, the standout one, France, even France is improving slightly here, but really Spain continues to find some better sort of growth from its manufacturing. Obviously, we've got service readings to come through as well, and that will be more telling. But we look to be in a decent I'd say decent, and in the context of what we've had, decent environment for the eurozone manufacturers out there, and again, export-led recovery for the manufacturers is still being flagged here at the moment, and that's being shown through with the numbers. US and Asia still account for a lot of the sales out there. So not bad on that front. We had UK manufacturing data out as well, which was a bit disappointing against the expectation of 57. We saw a 56.7 print, but new orders were still fairly robust, and overall 57, 56 and a half reading isn't a bad read, and we're still looking. It still points to a continuation of the fourth quarter growth rate seen for the UK. So all in
I
all,
have a
not
chart
bad.
on PMI for
Other
you
bits.
on the
Sorry.
screen.
Go on.
I don't know if you can see it.
Yes, just
It,
saw that.
it was shared by Reuters. It's a nice breakdown of.
Mm-mm.
Is there anything to take away from this? It seems. Uh,
Uh,
yeah,
I'm only looking. I can't see that. Mine's a fuzzy picture of that one
yeah,
from what I can
but
see. I'll try and pull it up myself. But
oh, but in general, is there anything to take away? Like the Chinese were okay, and I guess I don't know.
really, let me go and look at this one. No, I mean, well, look, you can pretty much see that it's we've sort of plateaued for the time being. We're
Yeah,
looking really to try and get the next wave and next build upon the sort of levels we've seen right now, and try and accelerate away from this sort of borderline growth contraction sort of environment that we're in at the moment, and just try, what do central banks call it, escape velocity.
yeah.
We're not there yet, I don't think, with these readings. But and as I said, as we see this recovery progress, it will remain like that mixed, and I think you'll see a slight balance change in in some of this data anyway. I think from you want to see a bit more rebalancing away from just Germany leading this recovery to a more balanced event.
But it seems like
Really.
Eurozone is fairly strong now. I just had to glance on this. I haven't had time.
Very strong. I wouldn't call it. I would.
No,
Very strong would
strong.
be
Not very strong.
too too much a word for me. Yeah, I think it's heading in the right direction, but nothing in the eurozone outside of Germany remains very strong,
Yeah.
in my opinion, other than unemployment.
So, is there anything you're watching for today? I mean, it's still earnings that's in focus, right?
It's still earnings in focus. I think. Let me just pull up my chart here. But in terms of the events really for the week, the key sort of overall events, you're looking still towards the central bank decisions by the Bank of England, the RBA, and the ECB this week, as well as non-farm payrolls. You'll tend to find that the bigger traders will leave themselves on the sidelines and wait for these events really in order to make up their mind about their more long-term positions. But for short-term traders, volatility going into a high expectation for at least a paving of the way for the ECB to hike to cut rates again, or to bring some form of new accommodation through is rife at the moment for the and we can look back on, we'll look at that over the course of the week, because I do think you'll see that from the pressure put on Euro Friday. There's a level of expectation now that with CPI coming on the lower side than expected, they will at the very least flag a move next month
Yeah.
in rates. But as we know, the ECB, if anyone's going to surprise, it's tended to be the ECB under Mario Draghi's leadership. So I think that there'll be we're definitely seen a built-in pricing towards a rate cut there, or at least some movement on the deposit rate as well. For the Bank of England, I think it's all around the inflation report as opposed to the Bank of England's rate decision itself. But again, I think if we get a statement out this Thursday suggesting that we look towards the inflation report, it just sets us up for the Bank of England to be remain dovish and to reinforce their message about rates staying low for a lengthy period of time, really, and maybe some movement in the thresholds.
Yeah, and just looking for today, it's also, I mean, NFP is of course, still a big number, but a lot of people look at ISM more carefully. And I'm seeing that I'm looking at my Infront terminal here on the calendar, and it says, I don't know if this is your consensus, but it's at 56, down one figure from previous reading. Is
I've 56 point. Well, I've got the headline at 56.5 last month and expected at 56 this time around.
Yeah.
For ISM. But yeah, I mean, listen. As I said, I think people get ahead of themselves. I think we should just try and look at take a look at the new orders component as well as the employment side of this, because the new orders, gives us a better flag of where we go down the line for this. So that'd be one to watch as a sub-component for the headline index.
That's it. That's a good point. Very good tip for the viewers.
Yeah, I think so.
And is there anything else today? It seems like a light calendar today.
Well, I mean, busy morning on the PMI front. I think, generally speaking, that's it on the sort of structured calendar front. I mean, as we get into central bank week, we don't hear from the central bankers because they're embargoed. They or whatever the word is, that they can't really express their views on rates or monetary policy at this time. So we tend to get a quiet week from sort of central bankers on that front. We may hear from US officials as they've had their meeting now, and that just to watch and try and reinforce what's going on. There's a piece by Hilton Rath of the Wall Street Journal. People tend to listen to what he has to say about Yellen and her tenure coming in. So it's worth a read on that front. If I can get the title for you, I would.
Yeah.
Just can't seem to find my.
No, but let's move a little bit towards corporate because we
sure.
talk a lot about central bankers, and I think there is some kind of sense that the sort of central banking-led story might be fading a little bit. I don't know if you agree with that, but
no, not at all.
And I mean, I think it's good for everyone. But Microsoft is picking a new CEO now, and this is the guy that's being Satya Nadella. Which I have made a joke twice about Nigella, and nobody thought it was funny. So it's basically they're picking an insider, and appears to be going for a very safe choice. When do you think we're going to see anything from this?
Well, hopefully, I think in the near future. I mean, again, the speculation is rife, and I think if Satya Nadella does take over, he's been at the helm for nearly half the lifetime of is it over the half the lifetime of Microsoft? So, in that sense, safe pair of hands is what the company needs. It's still it's a behemoth out there. People sort of overlook it for the likes of Google and others and Apple or whatever. But in terms of a company itself, it's still responsible for a lot of what we use on an everyday basis. And you can't. That's not one of those sort of things you can put in the hands of not necessarily a risk taker, but just a newbie. You need, I think, a safe pair of hands, someone who knows the company inside out, and that is definitely where Satya Nadella comes in.
Yeah.
So I think if it comes out this week or next couple of weeks, it'd be good for their share price. It'd be good for certain. You want a level of certainty. I think there's some issues. They could potentially see a change of chairman as well. Bill Gates may also give up the reins on that front and concentrate more on his charity work.
Well,
with his
there's
wife.
some talk that he's going to step down as chairman, but that he's going to step up as sort of a I don't know, like grown supervision or something at
Yeah.
Microsoft, which would be, I think, kind of interesting. Nobody would expect Bill Gates to come back as sort of a shadow CEO, which effectively that would be.
Yeah, I
So
don't know if that's a good idea. You know, if you're out, like, hey, listen, he still has a very influential sway. He's still got a lot of sway, obviously, at the company, and he is listened to on the board. He's listened to when things come across his bow. But you know, for a company, any company, you look for progression. You look for the company to grow, and hanging on to the past sometimes, or hanging on to the old leadership, it doesn't send out the right signals, if you ask me. Sometimes I think, as I said, Satya Nadella, as a veteran, it's good that you've got someone who's coming up through the ranks to sort of take over the reins. But you know, you've still got your chairman looking over your shoulder or ex-chairman, or whatever role he takes. I don't know. I just think you clean slate, move on, and take a step back.
so what should we make of the official bear market in Japan? We're seeing, what is it, 10% sell-off so far in
Yeah,
year to date.
yeah. Yeah, we closed down at 14,619 today, losing another 2%. I think it shows that officials have yet to convince wholly of their plan. I mean, I know prices from the CPI data last week are rising, and are seeing some of the influence of initiatives they put through starting to work, but it needs reinforcement, I think, at the moment, especially with this tax coming this year. Yeah, a level of enforcement wouldn't go amiss. I think you can probably read a bit too much into some of the moves in Asia this week, with a lot of the Asian markets out. So you know, let's
But
see where we're at next week. But
do people consider this to be a leading indicator for, let's say, for something like S&P? I'm just doing a quick
ooh,
check.
would I see this as leading? Well, I personally not, if anyone wants to argue against that, you know, fine. But I'd say not necessarily. You're looking at an export-led nation such as the Nikkei, such
Yeah,
as
but I'm talking
Japan.
about pure sentiment. I mean, I understand they're very different
Yeah, sure.
because Japan has been such an important play, and S&P is down 3.5 for the year.
Yeah.
So, but
Um,
is that just
no, I think
numerology?
symptomatic of the move that we sort of had. I mean, I think it's slightly different for Nikkei, but you know, as I said before, this is, if you want to see a correction, this ain't a correction of you know, not in the US. With Japan, I think there's a bit more nervousness around policy action over there, but you've got to be encouraged by what the central the EC, the FOMC have done. I don't, you know, and it shows that they're happy enough and confident enough that growth is there, and it's in whatever state it's in, for them to be able to take away these emergency measures. So I think if it's hurting, if the liquidity taken away, liquidity is hurting anyone, it may be hurting the Japanese and emerging markets more, but it's about time people stood on their own 2 feet. So I don't know. Leading indicator, I wouldn't say so. I just think Japan has its own issues, and people are looking at levels to come back in and trying to try and pick a bit of a bottom or a bit of a plateau for the Nikkei right now. I'm
So
not overly concerned by this at the moment,
finally,
but
I
I would
just
like
want
to
to
see
ask you
officials
about
come
emerging
out.
markets. You mentioned
Sorry.
briefly emerging markets. I just seen some flow
Mm.
data, just going through some research and going on all these flow reports, and it's been quite a devilish week for emerging markets. The week ending about, was it Thursday?
Mm.
Uh, it was the worst outflow for emerging markets since 2011. Do you think this is a nice contrarian data point where this could be a turn? Usually, when we see these huge flows, it's significant, but not necessarily in the obvious way.
Yeah, well, I think a lot of the flow has gone into people still want yield. They're hunting for yield, and they're moving back into periphery. Whereas we saw a wholesale selling of the peripheral bonds and markets there, the initial outbreak of this, the worries over the emerging markets. I think they've become more selective, and the investors have, and they're looking for yield. So whereas before you might have seen Spain and Italy slammed really hard with their connection to, you know, Latin America and the emerging markets, I think less so now, and this hunt for yield is still very much evident out there, and that will continue, I think. And I
Yeah.
think you can be a bit more selective in your investments if you're one of those portfolio managers, which I think they are being at the moment. So yeah, I think you know, moving out of emerging markets, I don't think it's a whole is it a wholesale move? Yeah, I do think we're taking that people are taking a step back.
Yeah.
But I think going into other risk assets, I don't think it's not pouring into safe haven flows. I think it's pouring into, as I said, some of the peripheral and some of the other outliers out there that provide some good value and
Yeah.
some good yield levels.
No, I think you're right. And there was some head fakes, to borrow a term you used a few times. There was some head fakes last week
Yeah.
into Swissy, into Japan. I'm sure it was in treasuries. I haven't checked, but
Mm.
it was a very short-term thing. So people are still looking to take risk. It looks like.
Oh, absolutely.
Yeah,
As I said, there were some polarized events last week, the last couple of weeks that sort of all came to a head together, and
yeah,
that's what really scared a few people. But I think
yeah.
you take them on their own merits, and they're very much containable, and they haven't proved contagious as yet in
Brilliant.
any meaningful way. So and it's a developing story. So
Yeah.
I'm not saying it won't cause contagion, but I just don't think it's not enough yet.
So anything last you want to say that you're going to be watching before we move on with our morning?
Um, no, so currency watch at the moment. Sterling's looking a bit on the soft side. As I said, I think there'll be a reassertion by the Bank of England this week, so of their dovish stance, and I think that may weigh on sterling, which has had such a good run. But I ultimately think there'll be some people picking up the currency at lower levels. This comments there by Swiss National Bank's Dan Thien today about again what would take to take away that floor means. I think the Swissies one to watch, but no. Again, in a central bank week and a non-farm payroll week, that's where you look for really for the stories. And I think how dovish will, how much of a setup we'll get from the ECB will be all key. And obviously we have ADP this week and jobs data, so that always takes some of the attention away.
Yeah. By the way, as we speak, the Bundesbank just released a cartoon
Right.
where Drog is. It's some weird. So they're not completely quiet.
Oh no, good. I'll have a look. Bundesbank with a
I'm
sense of
pulling
humour.
it up on the screen now. It's some silly cartoon. I don't know. Everything stays affordable. Information about Bundesbank.
Nice one.
So here's some weird characteristic of Mario Draghi. That was funny. Oh, anyway, but it's going to be an interesting week. Thanks so much for starting with us,
No, that's no
and
problem.
we'll talk to you about the same time tomorrow morning.
That sounds good.
Okay. Cheers.
Cheers. Bye.
Bye.
Bye.